What you don't count, you can't measure. Accounting is one thing that can blow up a business in no time at all, or should I say the lack of accounting. Today we're going to be talking to Shaila Chamberlain, a buddy of mine, about accounting and about accounting principles and about starting up a company and what you need to do with your accounting to get started the right way. This is Randy Kirk at Small Business Daily, and let me introduce you to Shaila Chamberlain.
Hi, Randy. Thanks for having me on your podcast. It's really cool seeing you again. It's been a while.
Well, we had you on earlier, and for those who haven't seen the earlier video, we talked about the difference between a CPA and a CMA. You are both, and give us a 1-minute version of what that is.
Well, I think everyone is familiar with Certified Public Accountant, CPA. We do a lot of work with taxes and bookkeeping and that sort of thing. A lot of CPAs do engagements as well. That's not my field, but that is what a typical CPA does, things like audits and reviews. A certified management accountant, on the other hand, is similar in the testing aspect and in the experience aspect. So you have to have a certain number of hours and you have to continually take more education in the field. But a certified management accountant actually looks more at the business processes and helps business owners to analyze what's going on and make decisions to become more profitable. So that's kind of the distinction. There's a lot of overlap between the two, but I really love what I do as a CMA.
Yeah, I think of it this way. My theory on what you do is that a CPA is an expense and a CMA has a return on investment. It's not an expense. It is an investment that should show a return.
Well, that's a pretty good characterization, actually. I don't want to offend any CPAs out there, and CPAs are certainly capable of doing some of the analysis that I do, or all of the analysis that I do. But generally speaking, in the traditional thoughts of what a CPA does, you could look at it as more of an expense for sure.
Right. So, Shaila, I was talking to you before we started that I have a series going right now on how to start a business from the very beginnings of the process, right up and through opening day and all the rest. And you yourself are you're probably just getting out of the startup phase. You've been at it for, I think, a little over 3.5 years. And by the way, very successfully. I've been there for the whole thing, and I've been very impressed with how quickly you've grown. And I know you've just moved into a new office, so you've had some unusual experiences as you've gone through this. Anything stand out?
Wow. Well, it has been a crazy process. I started this thing as just like I mentioned, it was more like I want to get back into that, helping businesses figure some things out and how to help them make money. And so it was kind of, there are some CPAs now going into this CFO business, part-time CFO business for a multiple of companies. And this was kind of a new idea. And my take on it was I really wanted to get into those very small businesses that are having issues. And so being in the Inland Empire, there's just tons of small businesses that really need just a little bit of financial education to help them along. And so these businesses are the types that are too small for hiring somebody, but large enough that they really do need some help in making some of those decisions. So it was kind of I think it's still kind of a new field, and there's a lot of opportunity there. But the problem with being in this sort of new space is that there's not a lot that you can look at and go, oh, this is how somebody else did it. This is the way forward. And so a lot of it has been kind of making it up as I go. So that's kind of what's been the fun part and the challenging part. And there's also really then that education of your customer, because when I talk to people about what I do, they really just want to categorize it. They want to say, oh, you're a CPA, so you're going to do my tax return. They're going to say, oh, you're a bookkeeper, you can do my bookkeeping. And so really starting to educate people about, no, this is an investment and you're going to get some return on it. You're really going to get return on this investment. So you can't go, oh, I pay this guy $300 a month to do my bookkeeping, and then you're comparing apples and oranges, because you're comparing, like, as you so aptly put it, an expense to an investment.
Yeah. And so one of the things that we're trying to help these small business owners with right now is this whole idea of the startup. Mm-hmm. And I know, working with a lot of small businesses over the last so many years, that many startups start up basically with no bookkeeping and no accounting understanding, don't even know how to create an invoice, don't know what they need. What are some of the foundational things? When you started your business, or if you were advising somebody right now on the bookkeeping side and on the accounting side, where would you suggest they start from the standpoint of putting together a set of useful tools that will help them get their business going?
Well, I got to say, first and foremost, before you do anything else, is sit down and sketch out a business plan. You got to have at least a foundational document that says what you want to do, what you think you can do, how you'll do it better than other people. And everything on there is going to be an estimate, by the way. Every single thing is going to be an estimate. I think I can sell this many. I think it's going to cost me this much. I think my fixed cost, my rent's going to be this much. Everything is going to be either an educated or uneducated guess. Everything's going to be an estimate, but at least get that foundation on paper so you have a starting point as to, what is this going to do for me? Is this something that can be profitable? Is this something that I can do? So that, to me, is really very important. And I think very few people do that. I mean, I did it. In fact, I think I may have told you the story before I started my firm, I was trying to decide, do I really want to go back into accounting after having been in accounting like my whole life, right? And so I was flipping through like the business section of the online paper, and I found that there was this hairdresser for sale, right? This hair salon. And so I thought, I want to be a hair salon owner. So I had no experience whatsoever. So I sat down and wrote out a business plan and tried to figure out, exactly what would this do for me. And then I thought, well, I'm gonna do this accounting plan as well too. And of course, once I did put them both side by side, it was very obvious to me what should be done. But once you get these business plans together, then you can sort of like take less of an emotional decision when you're approaching things and have a bit more foundation to do it. So that's kind of my example, but I think it's super important and I don't see it a lot. And every time somebody calls, because I do get a ton of calls from people who are starting businesses, tons of calls. And that is like the first thing I tell them is get a business plan together. If you don't know how to do it, Google it. There's also some good organizations that are local that do that stuff for free. So, or even if you end up paying somebody, it's an investment and it's a decent one.
So Shaila, when we start a business, you mentioned a business plan. I look at three pieces of that having a huge accounting requirement. Number one would be the startup expense. What is it going to cost me to open my doors? Number two would be a cash flow analysis, or a projection of profits and loss that might also include something pretty sophisticated, and a lot of CPAs don't even want to do them, which is an actual cash flow analysis. And then number three would be the actual bookkeeping setup for the company. They would include how to invoice, how to create purchase orders, how to receive goods, and then how to process the revenues and the expenses, and and the capital expenses, all that kind of stuff. So is that pretty much how you would see that kind of the things you must have to get started?
I think, yes, you're onto something. Of course, one of the things, or the things that will kill you faster than anything, is if you don't have the cash to get going and stay going. I mean, especially if you're starting a business today, I mean, one of the things you're truly going to have to consider is what's going on with the economy. And, what's happening right now is that in the supply chain, it's been like totally just smashed at this point. And so a lot of my clients are having these kind of issues, in that they order something that they have to pay for, and it normally is a 2-week time, and now it's a 4-month time, and so they can't get paid until they receive what they're getting, and then transform it or whatever, depending on the type of industry you're in, and then get billed. So the cash flow cycle has been really, really lengthened in the last year. And so those are some of the things that you have to anticipate and think about. So certainly looking at your cash flow and looking at it in the most thoughtful way that you possibly can is a very good step to take even before you get started. How are you going to manage those type of droughts in cash flow?
Obviously, this is a very weird time.
Yeah.
But there have been weird times before. I happen to have opened my first business in 1971. Don't tell anybody. I opened a bike shop in 1971, the same weekend as the only bi-coastal dock strike in the history of the country. And
we'll see. It's all about the timing.
no bicycles coming in at all. So I had no bicycles for the first 6 months. You can't pretty well run a bike shop without bicycles, but here we are again. And for the last year, bike shops have not been able to get bicycles. So there's these kind of issues. What is the backup plan when you can't get bicycles if you're a bike shop?
And so these things you do your best up front to really, really think through as best as you possibly can. But like I said, in the end, everything's going to be an estimate, going to be a guess, because the times, they are changing. We're looking at inflation for the first time in decades, really. I mean, significant inflation. So what happens when you've priced your orders at one thing when you gave out the quotes, and then you're 30 days later when they've accepted the quote and your costs have already gone up 10%. I mean, how are you going to handle those things? So thinking through as many, and I think it's kind of against our feelings or whatever as entrepreneurs, right? Because we're optimistic people. If we weren't, we wouldn't be doing this. So, but you also have to really sort of think of, besides the best case scenario, which everybody's like, oh, I'm going to be rich. That you also have to think through these worst case scenarios and how you're going to approach those. And looking at that financially on your document is a great way to do that. And then as far as like setting up your books, that is something that you really do need to do. And it's a great idea to get that up front. That's not going to kill you as fast, but bookkeeping takes on this organic quality, and before you know it, you got a total mess and you don't know how much you have. I've had clients who are just thrilled that they can look at their balance sheet and know how much cash they have in the bank, and so you can really mess up your books if you don't get them set up correctly. You can call a book, well, I don't, how I am about bookkeepers. You just don't know how well they're trained or what their capabilities are. So it's my advice always to go to a real professional when you're doing something like that, just because, well, CPAs, for instance, of course, we have to go through all this testing. So we're going to know what we're doing. Whereas people called bookkeepers or whatever, they don't necessarily have those certifications. It's going to be more expensive generally speaking, but getting your book set up correctly and getting a little professional help up front is a great start.
Well, here's a crazy idea. I have lots of crazy ideas after having done this so many times. Entrepreneurs, I know you want to open on August 1st or September 1st. I know you've got a date in mind. This is when you plan to open, and all of your process, everything you've been planning on is all based on that. Is it possible that if you worked for one more month at a job and took the money that you earned for that one more month and got yourself a CPA before you opened to take care of stuff that you're gonna have to get done anyway, and you had it from day one, would that possibly be a good idea?
I think it's a pretty good idea, and maybe I'm the wrong person to ask, but I do think it's a good idea. And the other thing too, while we're on the subject of startups, governmental compliance is no laughing matter. And if you haven't really thought this through, oh my gosh, there's a lot of things you're going to have to think through. Now, first thing that we have to think about is entity setup, getting your bank accounts open, getting EIN numbers, sales tax certificates. And then get yourself on a schedule for paying those sales tax. There's payroll. There are all these compliance sort of issues, and there's no set list anywhere. I even get surprised sometimes when I get a new client and I'm like, oh, I didn't even know that kind of tax existed. There is just an overwhelming amount of those kind of things to consider. So just, talking to a professional again is a good idea. And one of the things that I find that happens so often with new clients that have new businesses is, okay, they've done it themselves because they're saving money. And, I'm okay with that. I give actually a fair amount of free advice. I hate to say that, but I do give a fair amount of free advice when people call. So here's some free advice. A lot of people say, oh, I want to be an LLC or I want to be an S-CORP. So they go online or they pay one of these people that for a couple $100 or whatever, they do it for them. They always neglect to do this last step of filling out the form that actually requests from the IRS to be treated as an S-CORP. And so then what happens is they've paid somebody to set it up, and they think they're an S-CORP, but they're a C-CORP. And so then you're losing that tax advantage that you thought you had. And then we have to go back to the IRS and we have to fill out other forms, and we have to go back and see if we can get a late election. And it just causes all this other stuff that you have to pay somebody for. And then that whole cheap thing that you thought you were doing has turned into this big thing. And I'm not exaggerating when I'm saying almost everybody who goes that way seems to come back and have that issue. And I do this all the time. They tell me, oh yeah, I'm an S-CORP, and I'll get that S-CORP return ready, and then we'll go to file it and the IRS rejects it. It happens all the time. So that's kind of one of my free things to say is if you think you're an S-CORP, you better make sure you're an S-CORP, because you're gonna get yourself into a few $1,000s worth of trouble just trying to get it all ironed out.
And then there's always the sexy aspect of the type of corporation you are. So, it's all, it feels like it's just oh, cool to be an LLC. There's certain aspects of being an LLC that you may not like. An S-CORP might be better. A C-CORP might even be better, depending on what your situation is, how many people maybe that you have as investors and what kind of investors they are. And there's so many things that go on in that opportunity, that choice. I started one company as a corporation. All of the other companies, and I'm talking about dozens of companies, have all started out as sole proprietorships, so that I didn't have that expense in the beginning of setting up the corporation and all that stuff. And there was not going to be any significant liability in those first 6 months or a year. And then once I'm in the company for 6 months or a year, now I can say, okay, which kind of corporation makes the best sense for me at this point?
Yeah, and a lot of people do that, and there's certainly nothing wrong with that. So my advice on that score is to talk to a good attorney about something like that. A good business attorney can help you figure out what the risks are with those liabilities. A CPA can kind of help you think through what the tax aspects are of those, because they are taxed. All of those entities are taxed differently, and so you can get very, very surprised. And with sole props, boy, those get surprised a lot by just how much the taxes are. So it is a very good, again, investment of your time to just like call and get an hour with an attorney to kind of go through those sort of things, and call an hour with the CPA just to get their 2 cents worth from the tax point of view before you go forward. I mean, I have seen people just do some things that are just have been financially devastating to them. I've seen people like take early retirement to start their business and not understanding the amount of penalties involved with that. I've seen a lot of things and a lot of assumptions that they make on, like, particularly with startups, assumptions that they make about having expenses to write off that aren't really there. And then they're looking for that big tax refund to get them to the next step, and they're not getting it. And so there are a lot of ways to mess up. And I just, that's kind of my passion, is to talk to business owners and help them sort of navigate some of this stuff. I mean, a lot of things we can't do anything about. I mean, you're going to end up paying some taxes or whatever, but it is always better to know 6 months ahead of time what you're looking at than it is to be on tax day and go, and be hit with something shocking. Or that's my point of view on that, or 2 cents worth.
Yeah, and one last subject matter, and I think this is something which is going to affect almost 100% of startups, and that is, you've got this idea in your mind of how much you're going to sell the first month and the second month and the third month. I'm assuming that you've got some idea in your mind, but you probably are getting that idea from just like reaching up here and grabbing it down. And you're an optimist. You're enthusiastic about what you're doing, and you're just going to go out and kill it. I again recommend setting up a full year, maybe even 2 years of projected financial profit and loss statements. You can do that on a nice spreadsheet. If it's interactive, you can play around with the numbers. But then once you've done your expected case, then you do the worst case analysis. And then after you've done the worst case analysis, where you really try to say, no way will I sell less than this, then you do an even worse
case. That's not a bad idea.
So I had a fella teach me that about 30 years ago, and he goes, no, I want you to do an analysis that is so bad that you'll be wondering how in the world can the company even stay alive. But you do that worst case analysis with that in mind, and then there you go. Now you know who has to be laid off, or what you have to do in terms of the building or the space that you rented, or what are you going to do in that case where you're just way off. You still have a going concern. You still believe it's going to be successful, but the beginning months were nowhere close to what you thought. Or even if you've been down the road a little bit, and now you're in a recession and you've got some recessionary times going on, that's another great place to do that worst case analysis, so you can see what you might do to overcome that recession.
Yeah, and when you find yourself in the worst case scenario, then that's the time to look at the opportunities in front of you. And then everything is, everything with your business plan is certainly flexible. You don't look at this thing and just like, oh, this is my Bible and I've got to stick to it. When you get to that place where you're in your worst case, then it's time to rewrite that thing and see if you can't figure something out, So I just, I'm a big fan of that. And I love your idea about doing a worser case scenario.
So I didn't mention at the beginning of this video, but Shaila is such a good CPA and such a good CMA. I saw it right away in our conversations, and the result of that is that Shaila and I have written a book together, Making Money Out of Thin Air. And the idea is that there is money in your financial statements if you only know how to read them. and you can get a CPA or a CMA to read them for you. But how much better if you yourself were able to go into those financial reportings and say, oh, look at that. I hadn't realized that my overhead as a percentage of sales was growing faster than my sales. And that's why, oh, I don't have enough money to make payroll. If you could do that yourself, even better, maybe, I mean, you still want the CPA and CMA involved, but how much better if you are now capable of seeing those kind of things yourself?
Well, and what I really like about our book, not to like brag about it or anything, but what I really like is that we just give these super simple examples, and they're really not meant to say, oh, if you have this, do this. It's more about taking the time to think about what you have as resources at your disposal and how to sort of maximize what comes out of that, you know? And so I think a lot of what we do in life are just habits, and habits are kind of a way, I think, to make things easier and smoother, right? So you'd think they're efficient, but if you don't rethink those habits over and over and over again, then you are losing out on a lot of money. And that's kind of, I think, what we're trying to teach with this is you're doing it this way. Well, have you thought about this cost? Or, you know, and so that you're constantly rethinking what you're doing so that you can make better financial decisions. That was kind of my point in the whole thing, is like, just continue to think about it, be present in it, you know?
Cool, very cool. Shaila, thank you for coming on Small Business Daily. It's been a pleasure to have you here again. I'm sure we'll have you in the future as well.
Well, you are welcome, and thank you, Randy. It's always great chatting with you.
This is Randy Kirk. You've been listening to Small Business Daily. Remember, you can't manage what you don't count, and we'll see you next time.